They're gonna do it. I said earlier, he foamed the runway for what I think the market already knew he was going to do. The thing is, I don't think it's necessary, but I also don't think it's harmful. We're talking about a 25 basis point rate cut, most likely. The best example of something like this that I can think of from recent history is 1995. You actually had a new all-time high in the stock market the day they did the cut, but it was a single cut. And a lot of the reason for that, they had done a surprise rate hike in 1994, which kind of crushed the bond market. People were shocked. And I think what the 1995 single cut was about was just taking some of the pressure off from that. Maybe almost like a mea culpa, like we didn't really need to do that. Maybe that's what this is most like, and it would be likely that we make a new stock market high at the moment they're cutting rates based on what's going on right now. And it would be ironic, and people would look at that and laugh, but I actually don't think it's the end of the world.
All right, well, let's get right to the big story today. Jay Powell's congressional testimony. There was one word that kept coming up throughout the morning.
Uncertainties about the outlook have increased in recent months. In light of increased uncertainties about the economic outlook and muted inflation pressures, greater uncertainty. Bit of the uncertainties around trade tensions. Uncertainty can cause households to hold back as well. So the uncertainties, there could be quite a lot of uncertainty. Would remove that uncertainty around trade policy. And so that uncertainty within fairly broad uncertainty, I think it would remove uncertainty. It would be very uncertain. A lot of uncertainty where uncertainty showing up when businesses become uncertain, trade policy uncertainty, and also uncertainty about global growth. You have less certainty. That uncertainty, as you know, we're concerned about uncertainties and other factors.
The man has a lot of uncertainties in the outlook. But we picked it not just to show, I mean, Fed speak is very important. It used to be patient, that we would count the number of times.
Then it was
but I think it shows their posture now, emphasizing the risks, the uncertainties that would lead them to cut instead of the benefits that would lead them on hold.
I just want to say one thing. The ludicrousness of, oh, there's uncertainty. There is always uncertainty. The only difference is sometimes market participants exhibit that they're uncertain and sometimes they don't. But uncertainty is at all times, it's ubiquitous. How certain were things on September 10th, 2001? How certain were things in the year 1999? Everyone was certain that things would be great. Uncertainty is good news for investors. We've had uncertainty for 10 years, and arguably that's extended the cycle. We haven't had a market bubble because so many people have been pessimistic the whole way up. So you want uncertainty. Uncertainty is not a negative. The other thing is he's citing foreign markets a lot in his commentary. Yeah. And he's not wrong. PMIs in Germany and whatever. Here's the thing, though. In the modern history of the United States, we have never, not even one time, imported a recession from a foreign country. Not even in the late 1990s when the ruble blew up and Latin America blew up and the Thai baht blew up. We didn't import a recession then. We're not going to import a recession now because auto manufacturing numbers coming out of Germany aren't what you'd like them to be. So that is not a great reason, in my view, to be like, we have to be vigilant about recession.
But in 2008, when the Eurozone went into recession, so did the U.S. So
we caused it. No, we caused it.
Sure, but I'm saying developed world can all come in at the same time versus Russia is not as big a part of
the United States.
I think the trade
the United States doesn't bring it in from afar. If we have a recession, it's homegrown.